pure I'm sorry, about pure theory, about valuation, how to negotiate terms with your investor, at least not at this session, because from my point of view, these points are the least challenging issues when you raise money at the very early stages. So I'm not going to tell you about the pure theory. I'm not going to tell you about how to build unicorn, because you have plenty of storytellers. It's better to watch Netflix. You have plenty stories of success, plenty stories of failures. What I would like to focus your attention to here, first of all, of course, I gave you brief understanding how investing processes work. Second of all, I would like to draw your attention to the most challenging points and give you some practical insights how to deal with investor, first of all, and where you should find this investor, because it's the most challenging point here. So let's start. I probably share my screen. So yeah, here it is. So fundraising for early stage startups. Yeah, everybody watch it. Okay, that's good. First of all, if you, wait a minute, let me check how to, everybody should agree that fundraising is the most important thing for each business, because money fueling development of business, fueling further launch, develop, and raise every business. So I offer you now just to fix on two issues. Just imagine you as startup founder or any enterprise founder, and you should understand how much money would you like to raise to launch your own business. And you should definitely get the clear answers to investor why you need the reasons why you would like to raise money. And spoiler, the reason I would like to pay salary to me and my team is not the good reason to raise money. If you have these answers, you'd better to find your well-paid work and go there, go to office. So just fix these two issues now, and I offer you to give you in result maybe some top level strategy how to work with investor during raising money for your early age business. So, but before you jump into the raising for outside monies, for monies of third-party investor, I would like to tell you that at the very, very early stage of development of your business, you definitely have the investor. And I really like off topic, like this picture is the basic picture of each early startup founder who decided that he or she should make anything to look more serious before the eyes of the investor, and that's true. But the truth is also that even at the very beginning, you have already investor, and at the very beginning of your business, the founder, so yourself, is the investor of your business. What does it mean? It means that at least you invest your time, and your time should be recalculated as the unreceived profit that you ungot because you could find a well-paid job, full-time job, or you could waste your time to another business, find another business, etc. So every unreceived profit should be considered as your investment into the exact business idea. This is indirect sources of funding. Of course, there is also direct sources of funding, and each investor, you should understood, expect that you should believe in your idea, in your business so strongly that you should be so brave to invest some your money, your own money, at least just by demand, make landing page in internet, hire at least a designer guide to make such landing page. So you should invest at least small amount of your own money to develop your business, to launch it. And what sources of funding? It's personal savings, your own personal savings. So for example, just imagine you have such a rich grandma or rich uncle who is ready to give some money to you to develop your own business. Other source is personal debt. I advise you to definitely think twice or even several times is to lend money before while you starting your own business, especially if you are first-time founder. The ugly truth of entrepreneurship is that about 98% of startups will die. That's the ugly truth. And that's the most common negative side effects of solo funding, because you take the risk alone. So this strategy is quite working. It's cheap, you have freedom to spend your money, but definitely the risk of your failure is high, and cash flow problems definitely will arise because your amount of money is limited unless you are not the kid of Bill Gates or Sergey Brin, etc. So on the other side, bootstrapping or self-funding strategy is quite working. I can show you one example. This is one company, GitHub, very well-known company now. It was started as purely weekend project, as a pet project of the founders who well-known garage startups. They worked at weekends, and in result, in 10 years, their company GitHub was acquired by Microsoft for a huge amount of money. It works, and you can't avoid this stage of development. Be ready that you should invest at least small amount of your money to launch your business. But after that, you will definitely jump into the race for the third party's money. So this is a brief explanation how funding of startups works in general. So investor definitely determines several stages of startup funding. It's pre-seed, seed funding. It's the very early stages of startup development. At pre-seed stage, you basically have only the idea. You have nothing, only the idea, and believe that you could become unicorn. At seed stage, it is expected that you have already product market fit. So you have convert your idea into the reality. So you do understand what market needs, and market is ready to purchase your decision and pay money to you. Then we go to round A. At round A, you basically establish mass sales of your product. At round B, you definitely engage lead investor and started to expand market, but you play on your domestic market basically. Round C, you goes to international expansion. Round C, you definitely should engage strategic investor, and bingo, you go to exit. It's like IPO or M&A, where strategic investor purchase you buy tickets to Maldives and say, okay, the 10 years of my life, 24 hours, 7 days a week, it cost me X million dollars, probably. The truth, unpleasant, that probably your business will die at pre-seed or seed stage. But there is a possibility to go further. So let's discuss maybe more in details what should we do and how we should behave at pre-seed seed stage. So you need to raise money from other guys to develop the business. So I offer to fill this table as probably the chart, the map, and checklist before discussion with each investor. So what is expected at pre-seed funding? When you're talking about investor and you understand that you go to pre-seed funding. So let's check, first of all, what do you have? It is quite expected that at least you should have the idea. You have the vision, you have the understanding of the problem of the market and solution. Spoiler, it is not the truth. It is only your dreams. It's your illusion that you have understanding of problems and you have the vision of the solution. Second of all, you should clearly identify the target market. You should clearly identify the path, how you get to the target market. And I would like to draw your attention here on the very practical advice. Definitely, it is expected that there is a founder, but it's very important that it's quite rare that investors invest their money to solo founders, because entrepreneurship is quite challenging thing. It's quite challenging financially, physically, mentally, and it is expected that you should have co-founder. And if you will show the statistic, you could look at and see that investors, especially business angel, venture funds, prefers to invest into the teams, not into the solo founders. So you definitely should find a co-founder. Preferably, the competences of you and your co-founder should be complementary. The purpose of investing at pre-seed stage, you need money not to pay your salary. You need definitely money to validate your hypothesis, problem, and solution. So you should check whether the market really have the problem. And if it have the problem, are they really wants to pay for the decision of the problem? And even so, are you the guy who have the possibility to offer the decision to the problem? That should be validated at pre-seed stage. And investor here gave you money only to validate the hypothesis. Probably you've got no salary there. It is expected that you should give the results in 3, 6 or 9 months at top. So if you have everything here, you could go to seed funding. For seed funding, you definitely should show product market fit. So you should show clear evidences that you understand the pain point at the market, you understand the solution, ideally you should have MVP, and basically it's very important, you should have a team. And I mean not the co-founder. You should show that you got the understanding of key competencies of the team you required to develop the product. For example, if you go into B2B market, you definitely should sell B2B sales manager. You can go without them, he or she. You can go without marketing professional if you make in B2C business, etc. It's very important. Every investor looking at this criteria. At seed stage, definitely, it is expected that you should show track record. You should show at least small revenue, proving that the market is ready to pay any money to your decision. It is expected that you could reach the result approximately in a year or in a year and a half. So this is basically about the difference from the product side, what you should have, and team side, what you should have at pre-seed and seed funding. What's about the money? This is the great illustration how each first time or second time founder startup of every stage, talking about the evaluation. I get 10% of China market of healthcare. Why are you talking about? You have only the idea and probably some proofs that you are not hallucinogenic about the results. So I offer you to completely ignore the evaluation issues, because the truth here that see the last line. The truth here, and this is the average statistic for each market in basically in each country in the world. You could get not more than $250,000 at pre-seed and not more than $5 million at seed stage. Nothing more is the truth. Please do not expect that you raise more, and calculate your requirements to business development due to these facts. Now let's move further. Where you could get money. Very common stereotypic idea that you should go to incubators, accelerators, Sequoia, Y Combinator. It's really great, guys. I definitely advise, especially for first-time founders, to go to incubators and accelerators, because they gave you not only the money and not more than money. You gave you the industry experience. You gave the knowledge how to raise startup, how to handle it, how to survive it, how to speak with the investor. They are really great guys. You could get, I listed here great accelerators in the world, in USA, Y Combinator, Techstars, in Seedcamp, Techstars, Y Combinator in Europe, in Asia, China, Accelerator, Y Combinator, Alchemist. They're great guys, but I offer you to be more practical and found the investors within your own country. And believe me, I offer you to now to talk to the types of investors that quite common at every country where venture capital exists. So there should be not quite sexy and unpleasant truth where you could find money for your startup. So where should you go? First of all, friends, family, and fools. That's the ugly truth. But every year, about 40% of startups get funding from this source. It's easier because you have portfolio, your family, your friends trust you, they could give you money, even small amount. So my offer to you, if you have friends, business friends who have previous experience and you have good relationship and you have business approach, talk to them. It saves you time and give you the opportunity to develop your own business, definitely. And I would like to focus to you on the next portfolio of investors is business angels. They are great guys, and they are great because the business angels exist in each country, every country. They gave you money, they gave you industry expertise, and they gave you network. And they are most desirable investor for you as a founder at the very beginning. Your target is to get as more professional business angels into your portfolio as you could. So let's briefly focus on these guys. First of all, to understand how to speak with the guys, we should understand who are they. So business angel. Worldwide, it's a high net worth individual who invests a portion of his or her assets in high return entrepreneurial ventures, especially at pre-seed and seed stages. So think about these guys who exist in your country and try to get them. Now I offer you to understand what are the reasons for these guys to invest. And believe me, it's not only economic reasons why these guys invest into venture capitals. First of all, of course, it's economic reasons, but moreover, let's focus on non-economic factors because investments is the decision to make money, to give money, and the decisions is made by people and money is given to people. Therefore, sometimes it was information due to research provided by MIT. Many business angels invested because they desire to mentor entrepreneurs. They would like to be involved in startup life, but they wouldn't like to handle with all operational stages, and they wouldn't like to waste 24 hours of their life to work for the solo project. Sometimes they are driven by fun, passion, and commitment, and they would also value networking benefits. They would like to sometimes to change your life for the better, especially in such industries, for example, in healthcare, in education. Sometimes they're tech guys. They would like to they have passion to technology and they invest their time, their experience to technology projects just for fun, they would like to develop technology as is. They exist. And if you know these guys on your own market, try to go to them and talk to them. My strongest advice that you should keep in mind non-economic factors of the business angels, because it's easiest for you to communicate with them. It's easiest for you to find them, of course. So next, I really like to classify everything. So I offer you to classify business angels. They could be classified, they offer in MIT due to their whether they have relevant industry expertise and relevant entrepreneurial expertise. We could split operational expertise angel, guardian angel, financial return angel, and professional return angel. Brief spoiler, you should concentrate on these two guys, guardian angel and operational expertise angel. You should be eager to find these two guys and invite them to your project, even for free, even without money. It's very, very important for you. Please avoid financial return angel and sometimes professional return angels, but I'm not sure about the professional return angels. Let's discuss prototypes and typology of these investors. First of all, guardian angel. Who is this guy? They are quite active investors because they have experience in the industry you're working. And they have not only industrial, but they have entrepreneurial experience. They would like to coach management team and founder teams. They work with a limited amount of startups, 2, 3, nothing more, and they can definitely invest a quite significant amount. So you should definitely try to find these guys. They are driven by not only a high return economic expectation, but also by strong non-economic reasons. They definitely invest in within their country or their region, so they expect to communicate with you personally. Maybe they allocated to you 1 or 2 hour driving radius. They could invest about $100,000 or $150,000 per company. And what's about their due diligence? They provide their due diligence by selves, or they could easily engage experts. And more important, when you raise money for the other rounds, later stage investors are really eager that such guardian angels should be engaged as board directors and should save their seats within team later. So you should try all your efforts to get this guy into your team. Don't even ask them for money, ask them for their experience. The other guys is professional entrepreneur guy. They probably do not have industry experience, but they have previous experience as entrepreneur. They are really helpful to you because they could coach you and mentor you how to survive in the atmosphere of uncertainty, how to engage team without high salary, how sell without prototype or MVP. They're quite helpful. They could just share their experience with you. They also driven by high rates of return. They wish to build their experience probably as the investors. That's why they are very nice guys. They are not tough. They are not challenging your daily routine process. And at later stage investors feel quite safe when you have such angels on board. So they are nice. It could be your co-friends. So you should use the experience to and ideally their money to develop your own business. The other key guy here, it's operational expertise angel. Who are they? They are generally C-level executive. They have industry expertise, but they do not have their own entrepreneurial experience. But the key that they have some amount of money and they know customers, they know industries. Sometimes they are engaged by other angels, or ideally, if you know these guys, you should definitely go and ask them to participate into your project, because they could easily see challenges into the market. They could even easily say you whether the market has the problem, whether the market is ready to pay for the problem. Ideally, they could find you the customers, and it's very important. These guys are your dream investor at the early stage, especially if you go to B2B market, because they drive your customers to you. Basically, they provide active support to the projects, and later stage investors like that operational expertise angels participate at the board and save their seats further, because they provide you advice, provide the expertise, give you connection to the market. So try to find this investor to your board. Spoiler, for example, you should check LinkedIn pages, track top level experts within your industry, and try to communicate with them. Try to engage them, even not only as an investor, but as the expert as well. It's very helpful. The other guy is financial return angel. I would say that these guys could be also named as fools with money. They do not have huge startup experience. They do not have industry experience, but they have money, for example, for the other sources. For example, they are former lawyers, former accountants, former bloggers. They would like just to participate into the venture market. They are eager to provide you money, about $15,000. They get they have their own teams of the advisors, and they do due diligence very limited. They not quite helpful, to be honest. And the best way they could communicate with you, it's not interfere to your daily business. And later stage investors wouldn't like that you have plenty of financial return angels on board. So be careful. But if you have money, you will definitely find this guy. But please do not engage too many of these guys. It definitely will become quite challenging to business and will not help at all. So what's more about business angels? They are really nice guys, because they, as I told you earlier, they provide you not only money, they provide you potential flow of customers, they provide you industry expertise, they provide you market understanding. And it's crucial, because the key source you're wasting at the very beginning is not the money, you're wasting your time. They will help you to understand whether you go to the right direction or not. So there is also downsides of such types of investors. For example, the amounts they have are quite limited. And if you are going to further stages, for example, seed stage, you should engage more than one business angel. And sometimes at these stages, business angels definitely work as syndicates, but they're helpful. And I do believe that at the very beginning, you should try to work with these guys, right? Or probably go to incubators. They're the best option. To be honest, at the very beginning, your potential to get to top business accelerator or incubator, or even raise money from venture capitalists, is quite limited. So I offer to focus you on these guys to raise money and develop your own project. Maybe the other industry insights I would like to share with you is the criteria which basically business angels and early stage investor considering while deciding whether they need to invest into the business or not. I will focus the key ones. And this is also the criteria I used when we did making decision about investment. First of all, industry. Definitely, each business angel should invest and will invest only within the industry he or she understood. So you should find a business angel with relevant industry expertise. If the guy invests in artificial intelligence projects, he or she will never invest, for example, in delivery processes, or it would be quite strange. Second of all, market potential, market and growth potential. We are not talking about valuation, but you should show the investor that you have a chance to become unicorns. Of course, you should understand, and each investor understand, that probability that you will become unicorn is extremely low, but you should at least play at the market with potential to become unicorn. That's very, very important. And moreover, and I believe that there is the most important criteria you should also focus on is the integrity, your personal integrity, and the track record of your team. Because team and yourself is the only points you should influence, and you could influence at the very beginning. So each investor check you via internet. Check your Facebook, check your LinkedIn, check your track record, whether you have previous experience or not. Is it bad or is it good? Making failures, it's okay. It's better to make failures and have negative track record rather than do not have experience at all. You should also focus on the record of your management team. And while you have yourself, your own portfolio as a person who has deep industry understanding, you have potentially previous entrepreneurial experience, and you have management team, including the panel of experts who assist you. It's quite important, more important rather than valuation, more important rather than whether you have minimal value product or not, more important even if whether you have financial model or not. To be honest, you yourself as a founder, co-founder, your team, and the definitely huge market with the potential to become unicorn is the key elements at the very, very beginning. That's all. I wouldn't like you to spend too much time on validated business model. You do not have business model, you have only the idea. The only thing you could have is yourself and your team, nothing more. I do strongly believe in it. And just go into, for example, two numbers. It's called, and definitely we should speak about valuation. This is the valuation method developed by one United States early stage investor, Berkus. It's quite important guy. He developed the easiest approach to valuation, but I offer to see at this valuation list, not the evaluation, but checklist. See very careful, look at very careful. Berkus believes that you should have sound idea to go to the investor. Okay, it definitely very, very beginning point. Prototype, it is not required to, and to be honest, it's very hard to make prototype without even understanding of the pain point of the market. But look, you should definitely have quality team, quality board. And if you calculate sound idea, quality team, and quality board, you have at least 1/2 of valuation. And to be honest, you couldn't even influence on initial say at the very beginning. You couldn't even influence on product prototype at the very beginning. And it's nonsense to focus on creation product prototype without understanding of your customer. But form a quality team, form a quality board, and have a sound idea is the things you should focus on the very, very beginning, at the key factors of success to raising money to the investor. And maybe the least personal advice. Definitely fundraising is the most challenging thing is for founder, because investors are expecting then the founder should go to investor, talk to them, prove their idea to them. But please remember that your target is not to sell your ideas to investor. You should develop your business. Never run your business like money raising is the only business you have. It's very challenging. That's why, again, strengthen your team. Do not make business alone. Engaged co-founder, engaged team. You can't handle it alone. That's the key. And probably from my experience is the only advice I can give to initial first time and second time founders, just to strengthen their team. Because one of my friends, the guy who raised a huge amount of money, he would like to use the proverb, ideas sucks, execution matters. But I would like to add that execution are made by people. And decision about the investments also made by people. So focus on yourself, focus on the people you have with you, and these could be maybe the chance you could raise money and develop your business. So probably in result, we could fill our chart, we could feel and understood what should you have, what the purpose on raising money, what the result and time is expected by the investors, and what money you could raise and to whom you should go to raise money at the very, very beginning. It basically applies only to venture capital system, but probably that's a top level portfolio fundraising strategy. And that's my contacts. You could reach me via LinkedIn or via Telegram. I would like to assist to you. So probably that's all for now. And if you have questions, you're always welcome. Yep.
Thank you so much, Ms. Victoria. And dear students, if you have any questions, please feel free to raise your hand. And I'd also like to let you, yes, just give me a minute. And I'd also like to let you know that after we are done with Q&A, we will have a group photo. So don't leave the session and put your camera on. So yes, yes, so you can ask a question.
Yeah, one question for Victoria. And Miss Victoria, you have quoted that for the investment exactly less than that amount and high amount, that one thing. But some investors have, suppose like that, $500 or $100 or $2,000. He cannot invest in anyone industries or anyone products, that one thing. But you have to only be quoted that one thing less than 50 million, 500 million, that one thing. I have the questions. Suppose I have no any idea for the invest, but I have the quality. What can I do? I have money, but I have no any idea. What can we do?
So do I understand you correctly that your problem is that you do not have idea, you have
Yes,
money?
but I have enough money.
You have not money. You have only other
I have
idea.
enough money, but I want to invest in other things, but I have no idea how to build up this industries or anything that one.
I see. So you could become a business angel, for example, or you would like not to invest, but your motivation is to develop your own business. You could find co-founder. There are plenty international services. For example, as I know, Y Combinator made a free service, find co-founder match. It's like Tinder for co-founders. You fill your criteria and you, for example, feel I have money, I have, for example, previous experience, and you could find co-founders with ideas.
It means we can go to joint venture.
Yes, it's about joint venture. Or, for example, you could find good ideas on Product Hunt, where teams worldwide listed their ideas, not the ideas, but their products, and you could reach them, you could invest into them, or even join to the company as a leader or as a co-founder. That's my advice.
Okay, thank you.
I think there is like basically CEO clubs or something like that globally. I think that's one of the platforms as well, because I think most of the people that deliver lots of ideas over there. So I think that can be one of the platforms. Could that be?
Yes, definitely. And even LinkedIn, to be honest, is quite a helpful instrument to find co-founders, find the team. The tricky issue when you are, for example, finding advertisement or announcement when founders found a co-founder, to be honest, it is product. Basically, they expected more junior level co-founder. For example, they have the idea, they have the vision, and they have, okay, we will name you as co-founder, but definitely your sphere of expertise as marketing, and you got not more than 5% into the GV. It's okay, for example, if it is acceptable for you. But when you're talking about truly co-founder, for example, 50-50 co-founder, it's better to find people at the very beginning and generate the idea together. Probably I would advise you to find somebody at LinkedIn. LinkedIn, from my point of view, is extremely useful mechanics. Try to communicate with serial entrepreneurs, or sometimes investor, something insider like hacks, are trying to look for top managers who quit their jobs. It's a must for each investor to write an email to top manager who quit his or her job or within a month or free, and come on, what I think about, what they're doing. So it's probably they're thinking about something, and you could join with these people. That's probably the possibility to find them.
I think Mr. Manish Kimira has a question.
Hi, good evening.
Yes, please.
Yeah, thank you so much for your presentation. It was a wonderful one, and we learned a lot. Can you share us some tips so that we can present our company? Like, how do we present our company to other party or the stakeholders? Do we have any kind of tips and tricks? Do you have any kind of steps that we should follow to present our company in a good manner?
My personal belief, maybe not unprofessional, but based on my previous experience, it's an elevator pitch, and always keep in mind the people. Because for example, in B2B sales, you sell not to the company, but to the key manager who taken the decision himself without keeping in mind the company interest. So when you present your company to investor, you should communicate, should keep in mind that investor is probably, it's like looking a husband or a wife, because you're forming something from the very beginning. And the road is so hard, so long. So I, as an investor, definitely keep in mind that this is the guy with whom I probably lost my money. So just present and focus, first of all, on the idea. Just show that you have potential and show that you have a strong team and experience. Please do not waste time about, we will take 10% of China market. Bluffing, nothing more. For example, I make decision, for example, one of startups I work in now and advising for, we decided to change petrol bikes to electro bikes for delivery couriers. It's okay, it's great. That's great. I got the imagination of the size of the market, and the only thing I should know now, are you the guy who could create it? So keep in mind that you have probably, it's like first meeting, you have only 5 seconds to make great imagination. So focus on that the market is quite huge, and focus that you are the guy who could cover the market. Maybe this how, but it's my personal opinion.
Got your point, ma'am. Thank you so much.
Good evening, everyone. My question is, while doing due diligence audit, at that time, the track records of the promoter or management plays the vital role, or the track balance sheet of the previous 5 years plays the vital role while doing the due diligence audit of the company or corporation. What is your conception?
Yes, I got your question. It's quite, it depends on what business do you have. If you have, we are talking about late stages of investment, where you have track records, when you have revenue, etc. There is formal, quite common criteria what lawyers and financial guys looking for. They should know that you have plain legal structure. You do not have any issues with law. You have no, no problems with team, for example, legal one, or secret bonuses or secret options, something like that. They should show, you should show that you should have a good previous traction in revenue, in profitability, or have potential to scaling. But you have IP rights, etc. All these things are applied only when you have a business, when you're working, when you do understand your market, when the market is...
But we have to trust the registered or appointed auditor's report, no?
Advisory board.
Okay.
Yes.
Yeah.
Of course. But when we are talking about the due diligence at the early stage businesses, probably investor checks, first of all, do you have a team? What options your promises to the team? So into the business, whether you have IP rights, especially in tech companies, do you have track records? To be honest, each investor asks you, but each investor understood that you are very, very beginning. And for example, or you could provide, for example, traction from free clients, and it's okay, it's enough. so I wouldn't focus in and thinking that you should provide very deep due diligence at the very early stage. Maybe the key question.
But we can see the performance of the company, a reflection of the performance of the company. We can see in the balance sheet. If we cannot trust in balance sheet, then why we have to see the records of the management or the creator of the company?
Yeah, definitely. Fully agree. At later stage, when you sell something, of course, you have balance sheet, financial documents, you could check it, etc. But to be honest, at the very early stage, you probably do not even have legal entity, and that's okay.
Hi, good evening.
Good evening.
Thank you for sharing the insights. So basically, as you had mentioned that most of the startups, 98% of the startups, get failed in the initial phase. So how do you encourage someone, or let's say, when would be an ideal stage to take the risks to begin the startup?
Could you maybe reformulate your issue?
So basically, due to the risks of getting failure or during the initial stage, so many of the persons are hesitant to take the risks. So what would be your encouragement tips to those kind of persons, those who are hesitant to take the risks?
Exactly.
Yeah, for the
okay, do not go to entrepreneurship. Just find a full-time salary job. And for me, I do understand what you are talking about, because I working as a top manager at highly paid work within corporation. Okay. It's nice. You do not risk your own money. It's okay. You have salary, but and I have maybe the proposal for you. And for me, for example, for me, it was quite challenging just to take risk of receiving income every month. So sometimes you could be an entrepreneur. If you are working within, for example, working within huge corporation or enough large corporation, but you can't quit your job and say, okay, bye-bye, I will change the world, for example, it's okay. So you could offer as a top manager, as a senior manager, you could see the possibility to a niche to the market, and you could offer your C-level officer to partner. Come on. Maybe it's a compromise. It's maybe it's not quite good decision, but at least if you maybe entrepreneurship is quite difficult thing. It's not for everybody. For example, for me, sometimes I think, oh my gosh, I would like to go to office and get my salary and be safe. It's okay. But sometimes you should try. And maybe if you had communicate and negotiate with your employer to make something together as within huge business of your company, of the company you work for, it could be maybe a great compromise decision, especially for top managers.
Correct. Great. Thank you for the elaboration.
Thank you.
Do we have any other questions?
Can you let me know about the Berkus method once again, please? The Berkus method.
Sorry, about purpose of which?
Yeah, the Berkus method that we spoke about previously, the valuation, how you do on the Berkus method. Could you please elaborate?
Yeah, I will share it. Okay. Let me check again. I check. Wait. This one. Yep. Yes. Here.
Yes. Could you let me know, like, how the sound idea and the quality team, like, I did not actually get this properly, so could you let me know?
I show you this method just to illustrate that, to be honest, each early stage investors understood the valuation at the very early stage. It looks like, I don't know how you should name it in English, something like that. It's like, there is only hypothetical. It's just the assumption how to evaluate, and what I'm trying to, that's why I show you the this chart, because it illustrates that when we're talking about sound idea, it means that we are talking about the potential of the market and the true belief of the investor that the market definitely have the pain. It's only about this. Probably, to be honest, you could be pivoted plenty of times. And I mean, that's why I try to show you that you could find, get the elements. You could, you could influence. You could influence on the team. You could influence on yourself, and you could find the only one missing point which you could influence on, and you could find its sound idea. So, sometimes when I see at some deals, I see that especially it applies to second or third time founders. They have a team, they have a brand, they have an expertise as a serial entrepreneur. And what they do is they try to find the most relevant market that relevant to their expertise, and trying to find pain point to the market. Bingo, they got money. They got much more, even at pre-seed stage. They could raise, even for example, not in the US, but in developing market, about 1 million pre-seed. It's only investment in personality. That's why I'm talking to you, not fixing on finding a pain point at the market. You could develop yourself. You could develop not your brand. I'm not talking about lying to investors. I'm talking about finding your key experiences and finding the market which is relevant to your experience. That's why I show you Berkeley's method.
Thank you. Got it.
Yeah, thank you.
Any other questions?
Hello. Yeah, I have a question. Hello, ma'am. How are you doing? I just have a question. I would like to ask, how do you determine the scalability of a new business in a country with population? Like, for example, the poverty of South Asian country, like in Nepal, it's $1.75 per day, whereas in India, $2.15 per day. So basically, India has become the 5th largest seller in terms of iPhone, like iPhone selling in India. But in Nepal is comparatively low. So same product has high chances of selling in countries with higher population. So, how do you exactly determine the scalability of my business? Like if I were to start up a tech company, it were to reach worldwide faster than a retail business. So, the major question is about scalability of the business in a country with low population.
Probably I got your question, and you already answered it. When we are talking about retail business, the key criteria is the population. Okay. Is the only criteria. So if you got the retail idea, you'd better go to the country, for example, maybe even the low or moderate population, but the potential demographic growth. That's okay. Or maybe it's a company with, for example, when we're talking about retail business, to be honest, I'm not the key expert in retail business, but even, for example, if you have moderate or low population, for example, you could maybe, for example, play that the population is growing with salaries and income. For example, the company goes from the low income to middle income company, low income to middle income country. And you could play it at the market. But to be honest, with low population country alone, when you're focusing on the country alone, it's not venture team. You should maybe launch with this country, but you should show that you could scale to the other countries. At least you should know these countries. It's okay. For example, many businesses started, especially, for example, for Russian-backed founders, they started with Dubai, Oman region, Dubai, for example. Dubai has very small population, to be honest, really. But it could be easily scaling to many region, because the population, their profile of customer is very common. For example, if you in Nepal, you could tell that you scaling, for example, not to India. I do not know the Eastern, Southeastern Asia region, but just to try to find other countries, not India, maybe Malaysia or any other ones, trying to find the similar customers with the similar countries. That's the possibilities to scale.
Okay, thank you.
Any other questions? Well, I guess that was the last question for you, Ms. Victoria. So now I would like to request all our students to switch on their camera so we can click a group photo. Are we all ready? All right. Let me click one more. All right. Thank you so much. Thank you so much, Ms. Victoria, for your precious time and such an amazing session. I hope our students equally loved it like I do. And yes, thank you so much. And we hope to see you again for some other interesting sessions as well. And thank you so much, dear students, for joining. Have a great evening ahead. Bye-bye. Take care.
Parsu ma'am, can we get this presentation deck?
I think, Ms. Victoria, can you share it with me? I'll share it with them.
Yeah, definitely, no problem.
Sure.
Yeah,
Thank
I will
you.
share to you and partial share to everybody. Thank you very much.
Thank you very much. Thank you very much.
Bye-bye.
Thank you, ma'am.
Bye.
Thank you very much.
Thank you.
Okay.
Bye-bye.